Welcome back. Let's now analyze all the stock news that we put on the table, and the most important among them were the auto sales. So we have perhaps the best known auto expert in India, Prakash Diwan, joining us. Good morning, Prakash. Prakash is not just an auto expert, he's a good friend for the channel. Great 2023 to you, Prakash. Let's start with business. Tata Motors, it's a good number. It underperformed last year. What do you do with the stock now?
Good morning, Lata, and a great 2023 best wishes for that for all of you. So yeah, I think Tata Motors is clocked some very sentimentally very critical milestones, though they might not quantified in that way, in a very big way. But that 50,000 EV is a great achievement, especially when the others are still kind of not even crossing that 10,000 mark. So they've taken the lead and really built on it. So I think what's going to now happen is that their portfolio will start getting to cover many more price points, not just within the IC segment, but even the EV segment. They've already got 2 or 3 variants at very different price points, and that ability to be able to meet with customer expectations from all segments is going to be very important for scaling up EV, because it's a fairly high capex business, and you really can't do well if that doesn't happen. The other positive that I'm looking at potentially from Tata Motors is if JLR sales start picking up in China. China has been under this very constricted kind of a thing where there's no movement which was possible. So there's no question of people buying cars, right? But the moment that reopening starts triggering of some sort of a revival in car sales out there, which is imminent, which could take some time. I'm not saying it's happening today, but maybe the next quarter or so, JLR will probably get a breath of fresh air into its game, and that's going to be a critical thing for Tata Motors, because all these years, last 2-3 years, we've been seeing numbers without the JLR contribution in a significant way, and Europe also has been struggling. So quite a few things that have turned around, and if you look at the consolidation on the stock, it's been beautiful. I mean, it's kind of weathered the storm of sorts. And it's held its own. And the CV portfolio is something which will also start contributing. So they just have these 2 legs and the international business. And if they were to fire on all these 3 cylinders, the 2 domestic ones and international, I think it could probably start testing those all-time highs in some time. And then the debt resolution, the debt repayment and all of that will start getting well-timed. So yeah, good stuff coming from Tata Motors. But the entire auto pack, these numbers tell you that Maruti has been disappointing. Some of the likes of Eicher have been disappointing. But December is never a great month for auto sales, Lata. I mean, all of us know people keep on deferring their decisions. So I wouldn't read too much into the softness in this month's numbers, but look at what's likely to happen going forward. And there are some very strong indications that things could probably be positive as well. Yeah.
The other thing is that, medium and heavy commercial vehicle sales have come back in a big way, Prakash. You're seeing it not just with Tata Motors, with Ashok Leyland and Eicher as well. Now, for Ashok Leyland, the stock has had a good run from, sub 90 levels in, I think, April of last year. It's now back to 150. Do you see outsized returns here on because things are improving?
Good morning, Sonia. So, yeah, I think Ashok Leyland is just beginning to get into that turnaround path. I mean, it's done very well in terms of, strengthening its balance sheet in these years. So from an era where they could not invest more into newer models, newer price points, that has changed. They've started committing a lot of money. And what's also happened is that change of guard out there has been digested very well. So we don't put a value to these changes because they're very gradual and slow, right? I mean, it's taken almost like 18 months for that to happen. But Ashok Leyland's commercial sales pickup is not yet priced into that 140, 145 zone, is my guess. The reason is my estimates are that commercial vehicles will do very well, especially minor, given the fillip in mining, the kind of tipper sales that you would have is significantly a portfolio that only Ashok Leyland caters to. In fact, Tata Motors actually is small on that. So Ashok Leyland will improve market share as well. So that's going to be a little bit of a trigger for the outsized returns. But I mean, don't expect fireworks. But yeah, I think it will outperform the sector, if not largely the broader markets.
All right. Hi, Prakash. Good morning. Wishing you a good 2023, Prakash. In the last few days, we're seeing some traction on metals. even on ground, that is in terms of pricing.
Yeah.
Those select pockets, there is still some weakness, but I guess that's par for the course and maybe a matter of time before it catches up. How would you approach this space, particularly since we're seeing traction on iron ore, on pellets? What's your take?
Yeah.
Godavari Power and NMDC, you normally track those two.
That's right. Thanks, Nigel, and you two have a great year ahead. I think the metal prices from Shanghai. I mean, it's. I think December was $115 that we saw, which is almost like after 4 or 5 months that we've seen this price range come back. It's a very clear indication of what's going to come on the metal side. Absolutely, and my sense is not just the ferrous side, Nigel, because that's something where we are pinning a lot of hopes for the China recovery and reopening. But remember, China also will end up producing a lot of metal, I mean, a lot of steel. And then that means that the end product could probably, so iron ore demand will of course go up, but the end product might not be as great, the situation in the end product, which means be a bit patient with, how things pan out for the likes of Tata Steel and the JSWs and the JSL. But what's going to be very critical this year, if you ask me, is going to be the non-ferrous, and that too, particularly copper. If copper were to really be looked at, because there's this huge deficit of sorts that we saw in the entire 2022, there are no new facilities coming up, no new assets coming on stream, which means it's only going to get larger. Now, if that were to happen, copper could actually, and it's bottomed out so beautifully. I mean, on the charts, on the demand side. But if the demand were to revive, whether it's a abating of recession fears going away in the US, or the China reopening, or the Asian giants looking at electricity generation, I think copper is a space to be. And very clearly, if you were to narrow yourself down within the Indian context, I think a bet like Hindalco with its aluminium also kind of driving the business makes a lot of sense. So I would stay away from the ferrous guys for some time, while there's a very clear revival that's in the offing. But there could be some more time before that happens, and then that could test your patience. Whereas copper could probably take off from here on, and be with commodities is the game, is very clearly the mantra. But which commodities might make a lot of sense.
Okay, I just want to wind up the conversation we had previously. What's a hierarchy in terms of auto picks? Which would be the best, and how would you go down the line?
So, we've not discussed M&M because, of course, we just had the Escorts Kubota farm equipment numbers. But M&M also has been, there's a lid on the M&M growth just because of the farm equipment being a bit slow, Lata. But if that were to change, they were to start seeing their EV portfolio grow from where it's a very small sliver of their market right now, of their overall product portfolio. But if that were to start growing, deliveries start happening on some of the newer models, I think M&M is going to be the first out of the lot. And then I would look at a contra call on Maruti. As I said earlier, Maruti is actually consciously got out of those low price products, the A and B segment, to focus on the higher end. And that's what's reflecting in the numbers. But that's where it's more margin accretive also for them. So the moment the chip shortage eases out, which is easing out, they'll be able to do supplies, and the Grand Vitara numbers will start helping them in a big way. So Maruti would be my second pick, and then Ashok Leyland on the CV side. Tata Motors is a great buy, but it's for people who have slightly longer horizons. Right now, I think from a near-term perspective, these three will probably deliver much more for anybody who's entering afresh.
Okay, that's a great summary on those who have missed out on the numbers. Thanks a lot, Prakash. Just stay on. We'll come back to you.